Analyst Adam Jonas is optimistic about Tesla's artificial intelligence-driven supercomputer Dojo, arguing that it gives the EV manufacturer an asymmetric advantage in a market with a total addressable value of $10 trillion. Naturally, this has a significant impact on the company's stock. In fact, Tesla shares rose more than 10 following a positive note from Morgan Stanley that envisioned Tesla selling AI technology to other automakers and saving money by using its own GPS as much as possible, rather than paying for NVIDIA's chip supply. Jonas also raised his price target for the stock to $400 from $250 per share. An analyst with Morgan Stanley stated that Tesla ought to be seen more as a tech firm than an electric vehicle manufacturer. The company announced on Monday has raised its price target for Tesla shares from $250 to $400, highlighting the potential of the company's Dojo supercomputer project and bespoke silicon. Whether it's an auto company or a tech company, Morgan Stanley thinks Dojo could theoretically add up to $500 billion to the company's long-term value. He sees software and services revenue for Tesla as the biggest value driver, and this is a big note coming from Adam Jonas on this particular thesis here. He puts the total addressable market of whatever this is at $10 trillion. He then comes at the price target increase, which is significant in this case. To put it simply, I suppose the market for the supercomputer for our artificial intelligence in general, and talks about adding up to $500 billion to that Tesla enterprise value. Morgan Stanley believes that the Dojo supercomputer has the potential to increase Tesla's market at additional $500 billion, which is the reason for the bank's increased bullishness towards the electric vehicle business. Adam Jonas, led analyst, upgraded Tesla's price and referred to it as a top choice. The supercomputer that Musk has mentioned previously. But this is the first time that Jonas and his team have really looked into it and tried to figure out what it could mean for the company. He compares it to what AWS did for Amazon, suggesting that Dojo could help Tesla. In our opinion, the same forces that have propelled AWS to become 70% of Amazon's total EBIT can work at Tesla, opening up new addressable markets that go well beyond selling cars at a set price, target to 400 from 250, representing a potential upside of nearly 50% from current levels. For the past 5 years, Catalyst Dojo Tesla has been developing customer supercomputing projects, although Adam Jonas reduced his rating on Tesla to equal weight from overweight. He insisted he was not trying to call an end to the stock's impressive 2023 rally. It is noteworthy, he said that in June, Tesla's shares moved lower after Morgan Stanley lowered its rating ahead of its pivotal second quarter delivery and earnings reports, noting a significant degree of investor skepticism around the world's most valuable electric car maker at that time. Target, which is currently $250 per share, is still in place. But given that Tesla's stock is trading more than 100 times higher than Jonas projected for the company's full year earnings, further growth would have to come from sources other than its supremacy in the mainstream EV market. In any electric vehicle portfolio, Tesla is still a must-own firm. There is constant evidence that Tesla is becoming the industry standard founder of the electric transportation and renewable energy economy, which has caused one of the biggest industrial shifts in more than a century then, according to Jonas. This goes far beyond supercharging agreements with companies like GM and Ford and looks for additional possible areas of cooperation to pursue, such as battery supply operating systems, FSD, etc. Jonas then added, "You view Tesla as an AI beneficiary and an auto company, and our high expectations for the former have brought the stock to a fair valuation. For this reason, some people were taken aback by the most recent update, but Jonas claims that Dojo should help improve Tesla's full self-driving technology, which calls for a significant amount of processing power fit for a supercomputer like Dojo. A better full self-driving product should result in higher margin revenues for Tesla as more customers choose to add the FSD software capabilities to their car purchases." He estimated that Dojo could save Tesla $6.5 billion in costs over the next few years as the company increases its computing power with the in-house developed supercomputer. And more importantly, however, is that Dojo, which is made up of thousands of GPU chips from NVIDIA, can speed up the development of autonomous driving capabilities. We believe Dojo can represent the next step change in the market perception of Tesla. With Dojo, training tasks can be completed in less than a week as opposed to more than a month. Given the possible efficiency gains and cost savings over existing GPS, Tesla may be able to significantly cut the time frame for reaching autonomy. Uh, Jonas stated that Tesla's Dojo supercomputer could also aid in the development of the company's humanoid robot and have wider implications for the various science projects Musk is working on. This is what makes Tesla's ownership of the supercomputer so special for investors. Musk has previously stated that it makes sense to offer Dojo as a service, so perhaps this is similar to what we've seen with AWS. There will also be a lot of data that can be leveraged from Dojo. Essentially, it's machine learning, and the company has previously described it as a means of using video data from its fleet of vehicles for video training purposes. We would like to point out to investors that Tesla is only a small portion of a broader field of scientific and commercial interest that Elon Musk is devoting time, money, talent, and resources to. We also see Tesla as one of the more cohesive and complex companies that can act as a testing ground for cutting-edge technologies with a high degree of mission difficulty. According to Jonas, it's important to remember that Elon Musk, the CEO of Tesla, stated in July that the business intended to invest more than $1 billion in technology by the end of 2024. Among other things, Tesla is creating Dojo to assist with AI, machine learning, and computer vision training for its vehicles and emerging robotics initiatives. Tesla develops new features and updates current software using data and video footage from its customers' cars. Incredibly optimistic, although Dojo is still in its early stages of development. Tesla analyst Adam Jonas stated in a recent note that he believes its long-term applications can go beyond the auto industry. Dojo is made to handle visual data, which can serve as the basis for AI models based on vision, such robotics. In our opinion, Dojo Services, a third-party software and healthcare provider, can provide investors with the next chapter in Tesla's growth story after the company achieves progress toward autonomy. Additionally, Morgan Stanley projects that by 2030, Tesla will be able to charge its customers $2160 per month for recurring revenue from services enabled by Dojo and subscription software in cars such as self-driving systems, which Tesla does not currently offer, vehicle charging services, software upgrades, content, and other yet-to-be-developed services. By the end of 2017, Elon Musk pledged that a Tesla car would successfully do a cross-country autonomous demonstration without the need for human assistance. Only advanced driver assistance systems are available in Tesla vehicles, meaning that a human driver must always be ready to steer or brake at any time. After a mixed first quarter earnings report that included the weakest profit margins in over 2 years from a production standpoint, Elon Musk also told investors earlier this year that Tesla would focus on growing sales volumes and extending its lead in key markets over improving profitability. If things go well, we've got a shot at 2 million. Musk informed investors in early April about the vehicles for this year, but it was an optimistic estimate, and we feel comfortable with 1.8 million. We'll have to wait and see how the year plays out. Meanwhile, another company that's optimistic about Tesla, Deutsche Bank, highlights the dangers the EV manufacturer faces in Q3 due to scheduled summer production shutdowns, which will reduce delivery and production as well as discounts on inventory and limited favorable cost offsets in the quarter. Target at 300 in a note that was made public just a few days ago. Notably, Tesla cut the cost of its electric cars earlier this quarter after executives warned investors during the business's most recent earnings call that planned factory closures would likely result in lower production and delivery volumes this quarter compared to the second. Additionally, Tesla reduced the cost of its top tier driver assistance system, which is sold in the United States under the full self-driving or FSD brand name, from $15,000 to $12,000. Tesla's share price had been negatively impacted in previous weeks by cuts among other factors, but following Monday's Morgan Stanley note, shares surged above $272 at midday. If Tesla meets Morgan Stanley's 400 price target, its valuation would approach $1 trillion. In November 2021, the stock reached a record high of $414.50. Don't forget to subscribe for updates.